Um, hey, we have Tuvache Betton on the show today.
Hey
And
guys.
Tuvache is joining us here on YouTube on the Bet Out of That show to discuss a real estate strategy. And we met in Japan. We've been friends for a couple of decades. And so I invited him onto the show to share his experience in the real estate game. And so I thought it would be good content for our audience. So welcome aboard, Tuvache Betton. Welcome to the Bet Out of That show.
Hey, what's going on, Troy? Hey, what's going on, everybody? Yeah, my name is Tuvache Betton, and I told Troy a little bit about some of my thought process in the journey to buying a new home, especially during COVID. He thought it was pretty interesting, so yeah, I'll tell you all about it.
Then we have our resident tax accountant expert, Mr. Patrick Doherty. We affectionately call him Super P. Super, are you ready to have a good show today?
Yes, it's always a privilege to be on a beautiful show every Sunday. So yeah, I'm ready to go.
Okay, all righty. So let's get into it, Mr. Tuvache. Let's share what you have for the audience today. And I know we were talking about, housing in Seattle. The housing is really expensive, and around the country, it can be very difficult trying to get a home. So will you share with our audience what you have to present today? Yep, we can see your screen.
Yes.
Sweet. Yeah. So this is basically my reconfiguration of just how I bought my home. Um, as I mentioned earlier, yeah, through my journey of purchasing a home, it just so happened that my home was during the process of COVID and the world getting shut down. So yeah, just kind of thought about that process and how can I replicate it with potentially younger folks. And this is kind of where I came to. There you go here. Sorry about that. So yeah, this is my home. Yeah, it was the first time I turned a home into a rental, and this was just a little bit about the thought process. Um, one, it lowers your monthly debt exposure. You can save quite a bit. You can have a lot more stabilized. You can stabilize your debt output on a monthly basis, which allows you to save massive amounts of money. Up to 30-40% of everyone's take-home pay typically goes towards their rents and their rents and their mortgage. Well, you kind of hedge that and kind of put yourself in a more equitable position by renting out extra rooms. It's just me. So I had no problem making that call. I'm used to living in barracks. Your money typically spent on debt can be refocused on other debt elimination, credit card debt, car notes, and then wealth generation, being able to put yourself into in more liquid ways, money markets, stuff like that. You get to have a tax advantage and a ton of write-offs. I'm learning that as we speak, which is awesome. Since I've been in this house, I've added in solar panels and all sorts of other fun odds and ends. And just like anyone knows, home ownership comes with there's always something to fix. So it also allows you to keep a cash reserve for emergencies and property upgrades. Like I said, I have done quite a bit of work on this property, and because I can leverage my monthly debts or my money's coming in, I'm able to do different things with the property to keep it, a lot more to keep things moving smoothly. The refocus was being able to rent rooms with your friends. It changes the game. And what this is basically allowing three or more like-minded friends to build a business and a community at the same time. In our community, debt management, wealth management, money management are things that we really don't talk about. We don't discuss. Everybody's doing well for themselves. But we are one of the smallest economies in the country with one of the largest income generations. So owning rental property and living in it can be an excellent way to reduce your monthly mortgage payment while building home equity for you and your group. You guys are all living under one roof, one house. You're breaking down a very large payment into separate pieces for everybody to do well with. It allows you to save money, as I mentioned. The younger you start, the longer you can build with your team. Starting, if I were to start a team at 40, there's definitely not as much gain as being able to ride waves, learn along the process along the way with my peer group. It forces personal and team accountability for common goals. Yeah, we can put this in paper. We can hold each other accountable, which is something that, you know, people nowadays sometimes struggle with. Being able to say, hey, you're doing something well, you're doing something not well, and your behaviors and your decisions do impact the group. So being able to come up with a common goal for everyone to kind of fall in alignment with, I see it as a good thing. In the process of this property, you open yourself automatically to multiple forms of real estate strategies. Just like how light bulbs went off in my head to do this with a group, you guys get to have just further discussions about things like, you know, do we want to buy and flip property, buy and hold? You know, we can even do something, you know, like what we'll discuss later, buying properties in markets where people, you know, are looking for rental properties, and the cost of the property is not as high as maybe somewhere like a Washington, where our median in this area is anywhere between $550,000 to $650,000 for a property. You can replicate the outcomes like with like-minded people. You don't just have to build your community. You can create your community from scratch. So you're meeting people along the way that think like you. They want to change the path of situations. So you guys can kind of put that to good use. If you guys are young enough, you should have a nice group. You can build careers that benefit the group and put it into a teamed agreement. This is something I used to do when I was a younger mortgage professional. I used to work with a pod group of other professionals, a realtor. I was mortgage. We had an accountant, bookkeeper to refer business to. That helps everybody else have some a value add, knowing that you're a pretty solid professional. A general contractor, yeah, fellas, general contractors do very, very well, and to have that in your group can save your group a ton of money and a lot of headache. And something that I kind of been playing with is how does this work for soldiers? Soldiers get VA loans, and anybody that is associated with a soldier that sees the value in this strategy, you tend to benefit quite handsomely. Okay. Want to just do math super quick. Everyone wants to know a little bit about what's the difference between buying a house and renting an apartment. And I'm going off apartments here in Seattle, where they're a little spendy. Even buying a condo can be as much as a house. Then you have things like HOAs, and that actually will send the payment up higher. So here, you got your two friends, so you guys have a 3-bedroom house or apartment with 2 bathrooms, 2,000 square feet. It's going to cost about $715 a month, before all your utilities, tax, and licenses. The pro is, it's a little bit cheaper. There's no obligation. So one guy says, hey, I want to move away. Okay. He can just leave and could put you guys in a bad situation where you guys are just short his portion of the rents. And depending on the apartment building, it may be hard to get to sublease to another person. The cons, there's no equity. You get no equity living in an apartment. You get no tax benefit. There's no growth. The property raises up in value and lowers in values. You don't get the benefit for when that apartment property goes up. And like I mentioned before, there's no vested interest in the group. You could be the guy that just wants to bounce, and that's it, as opposed to a home. $469,000 3-bedroom, 2-bath home. Yeah, you might lose a little bit in square footage, but your guys keep it pushing. So now we have things that we can actually calculate off of. A $25.87 a month mortgage with 3% down, which is pretty standard for FHA. Okay. The pros, you get to build for future growth. There's definitely fault tolerance. 3 people paying for one payment note makes things a heck of a lot easier, allowing for all parties involved to save additional funds. You all have a vested interest in the property. You're building your own little mini community. There's safety in numbers. You get to get growth and discipline. The best way to be in real estate is to get into real estate. You get to learn about all the tax benefits, and you get to, over time, earn the equity in the rise and the fall of the property, as well as passive income. And just like any other investment, there's definitely a risk. So really quick story time. Let's say myself, Patrick, and Troy, we decide to purchase a home. We come up with a fair agreement. We all think we're all going to put in a third, and a third, and a third. And over the time, we're going to work with each other to purchase homes for each individual person. And then we all work as a collective moving forward. So this is it. We bought a home, we found a good deal. It's $1,000 a month, $333 a month, which is pretty darn good as opposed to what we were seeing before. But at this time, there's no cash flow. We hunker down, we eat a lot of ramen. And so we get to a point where it's time for Patrick and Troy. They get to go on and get another house, phase 2 of the world domination plan, leaving me by myself. The beautiful thing about being the landlord, depending on the market that you're in, you can charge more money for those rooms. My goal, as we can see here, is to put the majority or the entirety of the mortgage payment onto the tenants. This allows me to keep the exact same payment, so there's no change to my life, but it also allows me to have a little bit of cash flow. Those cash flow can start going towards either saving up for the next property or to offset the other utilities in the home. At the same time, Patrick and Troy, we find another house. And so now, okay, cool. Let's get ourselves a tenant to offset what we were having to contribute to house number 1. Okay. So Patrick is at $333 a month. Troy's at $333. And they got a tenant that's paying $550 a month, allowing you to cash flow $216, which you can either put towards the next property, or you can utilize that money to pay all your utilities and insurance, allowing you to keep a little bit more money in your pocket. All right. All great stories do come to an end, kids. Another year or two from that, we all microwaved our funds together, helping Troy get his house. So I've been cash flowing at $433 a month. Patrick's now cash flowing at his full $433 a month, and Troy's now cash flowing at $3,300 a month. The great thing about this is that it allows all of us over time to figure out and refine our strategies together as a team. We can save a lot more capital, keeping a lot more money in our pocket. And then by now, at this point, we can either figure out what's the next move. Now, doing this for us at this age, is a little bit, it doesn't reap as much benefit. We'll be basically doing it for the future generations. But I believe that understanding just these basic concepts for kids could be very, very powerful. I mean, kids move, they are our future. Teach them well, let them lead the way, right? So this are some of the tools that I use. The landlord tool sets, it actually helps me move business forward. One of the sites is called Rentec. Rentec is my landlord portal. I'm allowed to do all my marketing from one system. I accept monthly payments. It's one centralized location for all your tenant information. I manage the expenses, I manage the incomes, I manage the output for the month, and my tenants, through their portals, they're able to connect directly to their bank accounts to set up an to do auto payments every month. I do all the collecting and I even do all the tenant applications and credit checks through the same portal. And if you look below where it says marketing affiliates, as I mentioned earlier, you can do all your marketing for your property in this one suite, and those are just some of the rental platforms that people are actually out there seeing my room for rent, which I currently have out there. The next tool that I use is Law Depot. Rental and leasing contracts are sometimes quite a bit different from state to state. So I utilize Law Depot that has very standardized legal doc. Is basically, it's super easy. It takes me all of maybe about 5 minutes to put a new lease agreement together for a new tenant, and below there is a link to lawdepot.com. I'm not getting endorsed for them, but I use their product and it's super easy to use. You also have NORAD. For those of us, as I mentioned earlier, if you want to go purchase real estate investment property in other markets that are a lot more favorable as far as a pricing or a cap rate perspective, I would recommend Norada. And Norada, what Norada does, they have basically realtors that go to places throughout the Southeast and Midwest predominantly, finding those markets where there's high, where the cost of purchasing a home is considerably less than here in Washington. As I mentioned before, Washington's a little spendy. It's the cost of having one of the strongest job markets on planet Earth. So going to Norada, they go through parts of the country where maybe they're an up and coming city, town, state, and rental property is on short supply. So you have a lot of investors that are going in there doing buy and flips, and you as an investor, you can utilize and leverage those markets to your financial gain. That's pretty much it for me. Are there any questions?
Yeah. Hey, Patrick.
Yes.
Do you have any questions? Because I certainly have some, but I've been talking a bit. I was going to give you an opportunity to share if what questions you may have before I start asking some questions.
Yeah, I do have one question concerning Norada.
Yes.
Yes. So you said that some of these some of the market focuses of Norada is the Southeast and the Midwest, right?
Yeah. From what I've noticed, I see a lot of Central Florida, Ohio, Cincinnati, Pennsylvania.
Okay.
In those markets, and I would always do the research in those markets. Some of those places, you have, especially like Pennsylvania area, how close is it to, I would look at like things like how close is it to like Pittsburgh, because Pittsburgh has crazy amounts of they do a lot of pharmaceutical in Pittsburgh. They have University of Pittsburgh, so their education system, hospital systems are pretty robust. So I'll look at what markets or what's going on in those markets before to see what's warranting or
because I heard that Columbus, Ohio is supposed to be pretty strong. I'm not sure if you're familiar with that market.
I'm not sure yet. I've heard that in the wind. I know that things change. I believe they put in an Amazon distribution center there.
Okay.
So yeah, I mean, how I would personally look at it is, what kind of businesses are going into those markets? What's causing the markets to shift and turn? And are these going to be opportunities where it's going to be sustained and long-term growth, or is it just kind of like, it might be something a little shaky?
Okay. Do you also compare it to, let's say, Redfin and Zillow?
Oh yeah, absolutely. I look at like as I dive deeper into this side of the house, because this is kind of where my strategy is starting to go. I like the idea of higher rates of return on property to offset even what I have here in Washington. I mean, I have considered those kind of markets. Yeah.
Okay. Does it also do the Las Vegas area? I'm not sure if you're familiar with the Las Vegas property.
If it's there, yeah. I've been kind of keeping my eyes out in those kind of markets. Vegas is definitely taken an upturn when they first announced that the Raiders were going there. But everything kind of flip-flopped once we had COVID hit. Vegas being a city where there's their direct income is impacted by tourism. It's solely sustained on tourism, so how that is going to impact Vegas over time, I don't know. But yeah, I mean, Vegas used to be a place of great interest.
Yeah. Just a side note, because I know that Vegas did well during COVID. I own a property there. And,
Nice.
And it's done tremendous, even during COVID.
Oh, cool. You're going to have to learn me on something about that, man.
Yeah, I'm gonna have to learn you. Yeah, Patrick is doing really well on his rental in Las Vegas. So well that he connected me to his realtor, and his realtor is actually a YouTuber, and actually talks about the different properties there and stuff. But yeah, Patrick is doing good, and I thought it would be great to have you on the show to talk just about your personal journey, because I'm not sure we got into how did all of this come about, because I know once you came back from Japan after being in the service, you rented for a while locally in the area. You have family and stuff here, so there was no rush for you to just go off and get a property. You went off. I think you rented a condo or whatever for a bit, or I'm not sure if you purchased, but then you got to the point where you purchased a home and COVID hit. And I wanted you to share that story because, one, I know others out there probably could have gone through a similar situation. But number two, how you recovered by renting rooms in your house and using this Rentec software to find tenants and rent out rooms individually. So can you share that story?
Sure. Yeah. I was in a long-term relationship, and we were living together, and things happen. You gotta move. Well, the relationship was getting ready to transition, not in a bad way, but a good way. But I didn't want to leave the country, and I knew that I was going to come. So yeah, I was like looking at the market, and the market here in Washington was going up and up. And at some point, you got to start looking at the numbers. How does this really impact you? So yeah, I went through the process and happened to find this really nice home. My realtor was kind of like, well, you can always rent rooms. I'm like, well, why? He was like, well, it offsets. And I started thinking, I would start going through the numbers, bit of a pragmatist. And so you start looking at the numbers and be like, you know what, this actually makes sense based off of what I'm seeing in the market. And I started doing a little bit of research on, Craigslist. What are the rents looking like in this area? And so I started, I went and found the property, this home, purchased the home. And within 48 hours of purchasing the home, the world stops. And we all got, I had to learn this real fancy word called furlough. And I never heard furlough. But it was basically, our job was put on hold. The world was put on hold. And so I'm like, well, if I don't have money coming in, I was like, I definitely going to have to put a little bit more energy into focusing how to get people into this property. Then I found Rentec in the process of wanting to market the property. And it just made a lot of sense to run all of the business through one suite. And when I realized that they have the affiliate marketing, it also, that helped me understand that, oh, I don't have to go all over the world to get this done. Having renters definitely does put you in a position to where you are able to save quite a bit more of your money. It allows you to hedge your income generation. That was something that was very appealing to me. Like I said, we all went on furlough. We all had to make a very drastic change as far as all of our lifestyles. So yeah, it kind of came through for me. But yeah, marketing on all these different platforms was very, very interesting. It's been very helpful. I receive fairly consistent interest in the unit. I priced the unit out based off of what I see on websites like Zillow, as well as Craigslist. I do a map pool and say, hey, well, how much is a room renting for in this area? And I can kind of pace the market. There's also different strategies within, what you're offering your tenants. Like for my unit is everything's paid, so all the utilities and garbage, sewage, water, everything's awesome, which makes it a lot more appealing of a property.
And what you're calling a unit is actually a room.
And
Is
then
that what
correct?
an individual room? Okay. And so just overall, why Rentec? And Greg Dawson was asking for Rentec.com. He was asking for me to spell it out in the chat, so I did. For those who will be looking at this in a restream, I put in the chat Rentec.com and spelled it out. The lettering here on screen is a little small for those who are using mobile.
Oh,
But so if we could blow it up a bit, that would be fine. I do not want to mess up your presentation though. But what I did want to ask, why Rentec and not Zillow? Doesn't Zillow do a similar service? And why did you decide? And you used to be a mortgage broker, which we did not talk about. So you are very real estate savvy. You were a mortgage broker for many years. So why did you go Rentec versus Zillow or some of the other services?
well, I mean, if you notice here at the bottom under marketing affiliates, I still market on Zillow and Trulia. The reason I went with Rentec, it just seemed the most robust. Since it is also a merchant care portal, meaning that's what it allows me the ability to rent or to collect rents through Rentec. I was also looking at the fees, and the Zillow was a little, if I recall right, it was just a little bit more expensive, the cost of the money. Understanding that, yeah, I can get all of my marketing needs, cash collection and everything, and as well as the accounting through one simple solution. That's kind of why I made the decision to go with this platform.
How effective was Rentec? Like once you posted, how difficult was it to put your information in? And how long did it take you to get, leads and people contacting you?
I mean, I'm usually getting initial contacts within a couple of days to a couple of weeks, depending on how you're pricing the market. Some people, quite a few people initially, they'll ask you if you're renting your entire house for just a couple $100s a month, and you just laugh and keep it pushing. But for the most part, yeah, you start receiving. It starts once it starts populating on all the major websites. Traffic is fairly consistent.
Okay, and how difficult is the Rentec system to use, or how simple is it?
I can honestly do everything within the platform itself, including your tenant applications, pulling up, doing a light pull on their records, seeing if they had any fraudulent behavior in the past, as well as the credit check. It does a very soft pull, which the tenants are pretty much aware that they're going to take care of that cost.
And then, so I guess my other question is, you use Legal Depot?
Yes.
Or Law Depot?
Yeah, Law Depot. Yeah.
Law Depot. So if Rentec has an all-in-one solution, where does Law Depot fall into it from a rental contract? I would think that Rentec would have a rental contract template in that system. So where does Law Depot fall into that?
Well, think about it. Every state has different language per what they allow in their rental agreements. Rentec's a great tool for landlord management, marketing, and asset collection. But not I don't think there's really any solution out in the world yet, including Zillow. But I may be wrong. There's always a new rollout. Being able to get that a proper agreement with all the proper state specific language is very, very helpful. Yeah, Don't know why they don't have it yet. Never know. If as a company grow and build, they might be able to buy Law Depot out.
And how expensive is getting a rental contract through lawdepot.com?
It wasn't very expensive at all, and even what I believe it was $60 for the year, I believe. But since that's associated as part of your rental property, that's still a nice little piece of tax write-off that you can have at the end of the year.
Indeed.
Okay, so it's a subscription type thing where if you got into a dispute, do they support you? Do they?
There's termination notices from landlord to tenants. You can do your tenant agreements, everything that you need, whether it's a commercial, Class A, Class B type property, residential or commercial. Yeah, all the major property types are here.
So do they actually do any additional legal services or just provide the contract and maybe do they provide explanations on the contract saying?
Oh yeah, there's definitely a fairly good help center where they break the documents down. But yeah, if you read a few of these, you're pretty clear on what you're signing on.
Anything live, or is it just stuff you read on your own?
Stuff I read on my own.
Okay. All right. Okay. And so how much is the Rentec service? And
the Rentec, they charge a small annual fee, but the majority of their fees come from their merchant care services. So I kind of look at this platform like I look at any platform. There's the interaction that you see, and then there's the business of what that website is. Basically, I see this as an automatic payment center, a merchant care center, but it's wrapped around the needs of a landlord type platform. So yeah, they receive a good portion of their proceeds from the merchant care side.
So does your tenant pay Rentec and they pay you, or how does that work?
Well, it's just like using your PayPal, so you have your account and it just ties directly into your account.
And then I have a couple of questions here in the chat. I'm just looking in the chat. Tony Johnson asked a question earlier, and that was, is renting by rooms more profitable than renting the whole house? And what's your experience on that?
Well, at this time, renting rooms is a little bit more flexible. You can go and gauge per to what the market is saying, which is probably going to be a lot shorter turnaround time as opposed to just renting out your house. The other cool thing about renting out the property by the room is I get to tailor who my audience is. I personally, I'm going right now. I try to make the property, I do a little bit more marketing on college campuses and other places like that in hospitals. So you can get nurses. There's a lot of care people that can use a good place to stay. So yeah.
And you actually live in your property too. So
yes, I do.
Right.
Yes.
So it's a situation. Go ahead.
Very helpful as a landlord, you being able to stay in your property, make sure that things are working and people are taking care of your property and your investment.
Yeah. And then another question here was, is Law Depot better than LegalZoom? So
well, I did not
Zoom is pretty popular.
In LegalZoom, you have access to real estate lawyers and things like that. As far as their document draws, they could have that service. I didn't dig into LegalZoom for their rentals, their rental platforms.
And then is it possible to blow this up further? Oh,
let's see.
I do not want to mess up. But I want to go over to this Norada. Is that pronounced Norada? Yeah, you can't blow it up. It's going to take you out of presentation mode, and I think it's going to screw you up. But what you were saying about Norada, that is a special real estate company that will allow you to purchase rental properties so that you can make money. That's bet in the real estate game. So this company, this real estate company, specialize in selling rentals.
In investment property, yeah.
Okay. All right. Investment properties. Gotcha. All right. I'm checking the chat to see if there are any additional questions. I do not see any additional questions in the chat. I definitely would like to thank you for coming on the show, Tuvache. Mr. Betton, you know, certainly we'll be connecting. We affectionately call each other cousins. So when we, hey, cousin, what's up, cousin?
That's
It's
my
not,
cousin.
yeah, it's not like any LA related thing. It's just, you know, we've been boys for so long. We've just been just really tight. But thank you for coming on the show and sharing your information. I think it's pretty powerful, you know, being able to rent a particular room in your home so easily. Because when we talked off camera and before we came on the show, you were telling me how simple the process was and how easy it was. So I really appreciate you sharing that.
Yeah. And like I said before, you know, I took this experience and wanting to recontextualize it for kids and the youth, I think is going to be very, very powerful over time.
Okay. And I just stopped you from sharing. So, Mr. Betton, we will see you next time. Maybe we'll get an update in the future on
All right,
some
fellas.
investment.
You have yourself a
Okay.
great day. Thanks for having me on.
All right.
All right.
Thanks
you.
for sharing. Thanks for sharing.
Hey, Patrick,
Yes.
it's time to get back to how do we make that money? How do we get that money to buy those investment properties? And like we always say, we call the show Bet Out of Debt because when you place a trade, it's called placing a bet, which is a metaphor for investing. So anytime you invest, it's called betting. That's just the nickname, the term for it. So let's talk about equities, which is a fancy word for stocks.
Yes.
Equities is, for those who may not be familiar with the meaning of equity, it means ownership, literally. That's what it means. And so let's talk about the price of a stock and where does the price of a stock come from? And, you know, I have questions related to stocks and equities and the prices. And one may think Ford, which is trading per share at around $11 per share, is much cheaper than, let's say, a Chipotle, which is trading around 1,400 per share. So just because the share price, one may be more expensive than the other, does not necessarily mean that share price is actually cheaper. So where does the price per share come from? How is that formulated, Patrick?
Okay, so first of all, what I'd like to do is start from the basics. Essentially, as everyone should know by now, the price one share represents the 1 unit of ownership in a corporation that's publicly traded or privately traded or privately held. But in this case, we're talking about publicly traded companies. To break it down on the balance sheet, you have your total assets. So that would be your cash equivalents, accounts receivable, inventories, fixed assets, intangible assets, minus your liabilities equals your net worth of the company. And so the net worth of the company is divided by the number of shares outstanding. You could get into fully diluted, you know, your standard EPS, your standard share count, or without the dilution of options and other derivative securities. But anyways, 1 share represents a unit of ownership. Now, there are various tools that could be used to calculate the expectations of what the price of a share should be. One uses the Gordon dividend method, which is basically the annual dividend per share over the difference between the required rate of return minus the expected growth. And that you can calculate the price of the share that way. However, I think the way a lot of people analyze the price of the share is through expected cash flow, expected earnings beats. And that's where you're going to get the price of a share. So if you look at the free cash flow of the firm over the, I guess, whatever the weighted cost of capital structure the company has minus its growth, that will give you the an intrinsic value of the share. But stocks hardly trade within their intrinsic values because many, particularly the tech stocks, many will think that they have outsized growth. They will beat the S&P 500. They'll beat some of the other traditional indexes. And as a result of that high growth, people will pay more for that because they think that the company will grow a lot faster than some of the more mature companies, like such as some of your utilities, maybe some of the airlines, maybe some of the hotel stocks, as compared to, let's say, some of the sexy semiconductor stocks like Lam Research, Skyworks, Nvidia, things of that nature. Tesla is another fancy brand name because it's got high growth expectations and people are willing to pay more for that growth. So that's why you would see the price per earnings per share on some of these high tech stocks higher than, let's say, some of the price per earnings on some of the more, I guess, boring, if you will, utility stocks, bank stocks, and some of the slower growing industrial stocks.
So I would like to share a simplistic, very simplistic way of describing what is the price of a stock. And it's super simplistic. Patrick, do not kill me on this, but this is how I teach my children, my younger children. So I essentially say the price of a stock is equal to its EPS times the multiple. So essentially, whatever that company earns per share, that's what EPS is, the profits per share on the income statement, that's what the price of the stock is equal to. It's equal to EPS, the earnings per share. Then exactly what you just described times its multiple. And the multiple could be the earnings per share, whatever the company earns per share. And then there is a exuberance factor. You know, I would pay 10 times the earnings per share. I will pay 10 times, 20 times the earnings per share. 100 times the earnings per share because the company is expected to grow. So rather than paying the company par, because the price of a stock is really equals to the earnings per share times whatever multiple the market is willing to pay on top of that earnings per share because of exuberance. And so that's a very simplistic way I was able to explain it. And my kids kind of got that. And it is overly simplistic. And so that multiple is called a PE ratio, as we know, Patrick.
Mm-hmm. Yes.
And so I essentially say that the price of Ford at $11 per share is whatever its EPS is. And then if the EPS is, I don't know, $6 per share, then if it's trading at $12 a share, then someone multiply it 2, so the PE is equal to 2. So it's 2 times the earnings per share. So that's how Ford came out to be $12 a share. Or if Chipotle is actually making, $1,000, so let's say $100 per share, but the market believes Chipotle is going to grow very quickly. Instead of the market paying, $100 per share, they would pay a PE ratio, a multiple of 14 times it. So that's how, Chipotle turns out to be $1,400 a share. So you really have to look at the multiple to understand how expensive a stock is, because the price of a stock is essentially the EPS and whatever multiple the market is willing to pay above the EPS. What are your thoughts on that without killing me on that super simplistic way of describing it for the kids?
I think that's a great basic description of the price of the share. I mean, like I said, there's so many different ways to value, and it can get pretty complicated. However, but simplistically, if you wanted to say that, if we want to put it into extreme layman terms, yes, the way you would determine the price of the share is the earnings multiplied by whatever multiple people are willing to pay for that stock based on expectations of growth.
Right, and that earnings is earnings per share.
It's earnings per share, exactly.
Right. So the price of a stock is essentially the earnings per share. That's essentially it. And then the PE ratio is that multiple that people are willing to multiply to on top of it. Mm-hmm. I'm repeating myself, but I think people get it. So now that we talked about where the price of a stock comes from and how do you determine which one is cheaper than the other, because Ford could be trading at $12 per share and Chipotle could be trading at $1,400 per share. But the multiple, the PE ratio for Chipotle could be 14 because Chipotle is making $100 EPS. So the PE ratio is 14 times, where Ford could be earning 50 cents EPS, but trading at $12 a share. So you will have to just kind of divide that out and figure out how many multiple times, 50 cents that would raise you up to $12. But one can easily see that Ford is the much more expensive stock because it's trading at a multiple extremely crazy compared to, the EPS and multiple on Chipotle. So I just wanted to just kill that just to make sure we really got that concept down. So Patrick, let's talk about your trade last week. On the show last week, you recommended a trade. You laid out a support system for applied materials. Mm-hmm. And I know how that trade went. And if people out there in YouTube land would have followed that trade, what happened?
Well, let me share my screen real quick. So what happened is last week at this time, I recommended that people sell a put that would expire within 5 trading days, which essentially you'd put in the trade on Monday of last weekend. It would expire, hopefully worthless if you don't want to be assigned, by Friday. And the trade was to sell a put option at $128 a share, and with a strike, with a premium that you would collect per contract of about $90. So what happened is that the market did fall below, because there's a little bit of a tech sell-off, and touched the support. Well, it fell just slightly below the support line, and it hit the 50-day moving average of about 128 and a bit. But then it closed back above the support line here, and right now it closed at $132.95 a share, effectively closing above that strike price, that critical strike price of $120 a share. And you were able to collect that premium without being assigned.
It was a winning trade.
It's a winning trade, yes.
Patrick, you nailed it. That was pretty good. You nailed that one last week. And it was that where you called out support was really, it wasn't that far from the strike last week. So it was a really cool call that you made. I saw AMAT, Applied Materials, fall below your strike. And then I saw it come back up near the strike. And I actually released the Applied Material video excerpt, I believe Wednesday or Thursday of last week. So good call, good deal on that trade. Good job. So Patrick, what's your call this week? And what is your update from your trade, your other trades that you put on from the previous week?
Okay, so my call for this week would be to continue to place a put on AMAT, because that's a very good start. Let me type in AMAT real quick. Just bringing it up. It's a little slow. So I would continue to put the give me one second, get the probability. I would continue to suggest any, like maybe a 129, sell the put and collect a $98 premium, because that's still within that support level of about 128, 129-ish on the Bollinger Band here. That's what I would recommend. AMAT is a very strong company. It's one of the best semiconductor companies on the market right now. It's a very, very critical component of the SMH, which is widely followed.
Yep. And I'm a little surprised because I'm looking at the Bollinger Band. And for those who are not familiar with the Bollinger Band, I say it every week, go look at the video about Introduction to Technical Analysis and Bollinger Bands, and you will get everything you need to know why Bollinger Bands are so important for us in the strategy that we use. I'm a little surprised, Patrick, because the Bollinger Band, where you are, the strike price that you're recommending on this trade is above the second deviation low on the Bollinger Band. So a little surprise there, Patrick. You're just going on a pure support play, price action, right?
Yes. So the Bollinger Band's about 129-ish. I'm also looking at the probability. I like to play the probability around 75%. If you want to be a little bit more conservative, you could replay the 128 strike price and collect $70 per share. But again,
so that probability there
is on the 120 on the 128. It's about 80%.
Right.
Winning, being keeping the premium without being assigned, whereas the 129 is about 74, 75 without being assigned.
And so, Patrick, just what you're doing here is you're using a delta Greek.
Yes.
At the top, that column delta.
Yes.
That's referred to in the option trading as a Greek.
Yes.
And the way you're coming up with the probability of winning a trade, you are taking that negative Greek and subtracting it by 100.
Exactly.
So out of 100% probability, you're taking that negative delta Greek, subtracting it from 100, and that's giving you your probability of winning the trade, the probability of being out of the money and winning the trade. So essentially, you're saying you have an 80% or a 75% chance of getting this money, this premium, keeping it based on those odds. So,
right.
Yeah.
But
we covered that last week. I just want to recapture it, make sure people understand it. But go ahead, Patrick.
But as I was saying, I think the volatility that we saw kind of like midweek in the market may be subsiding a little bit. And it might not be, if you want to be a little bit more aggressive, you could put the 129 strike price on and collect quite a bit more premium, between $70 and $98 a share.
Okay.
And that's just right around here. So it might be a little bit within the second deviation of the lower Bollinger Band. But I think because it's a really good company, it's not a bad trade to make.
Okay. All right. See you later, Miss Jams. Thanks for joining. Miss Jams just hit us up in the chat. God bless. Take care. All right, Patrick. So let's go into your trade for the week. Let's go into your other trade, your covered call situation. So let's talk about that.
Okay, so the covered call situation is based on the SMH ETF, which is a semiconductor ETF. I think last week I got assigned at around 247, and then the market did dip quite a bit below my strike price. However, it has come quite a bit back. Last week, I was able to sell some calls rather, and I collected roughly $2 a contract last week on my SMH, and obviously the shares did not close above 247. That was my strike price. So this week, I would recommend, let me bring this up.
And just to interrupt, when Patrick says he collected $2 with options, there is a 100 multiple. So $2 equals to $200. But go ahead, Patrick.
Yes. So let me see. Volatility. Here we go. And so what I would do is, got the wrong page here. Let's go 14.
Yeah, and I think it's important we talk about the expiration. You're talking about a week expiration. So an option contract that you're selling 1 week out. So that contract would expire on May 14th.
Exactly. So if I were to sell this on Monday, I would get roughly $161 per contract, which would expire on the 14th. So that's like a 5-day trading period. And I think that's a good cover call to make. Where
And how many covered calls are you going to sell? Are you selling two
I'm
or
selling
three?
two cover calls exactly, because that's I got assigned 200 shares, maybe about a week or two ago, and then I went from selling puts to now selling calls.
Gotcha. Okay. So, Patrick, you love that SMH, man. SMH is your ETF.
It's a strong one, as I mentioned in a previous video. I mean, it outperforms the S&P 500, which almost all fund managers can't beat. Then it outperforms any tech index or any tech ETF, which also outperforms the S&P, and it's been consistent over a 5-year period, beating those two averages.
Yeah, SMH is the ETF is powerful. It's that semiconductor ETF. You own it. I own it. I mean, we recommend it. I mean, we're not financial experts, and obviously, what we talk about here is for entertainment purposes only. We're not making any real recommendations other than sharing information to the audience. We really like SMH a lot. That's for sure.
Yes.
Okay, Patrick. I think that's it for today. I think we had a good show. I really wanted Tuvache to come on and share how to easily rent a room in your house, as well as his whole strategy of friends coming together, young adults coming together, sharing a home and supporting one another going from home to home. So I think that will do it, Patrick, unless you have
Yes.
something else, my friend.
No, I think that's it.
Okay. So, I mean, that is the Bet Out of Debt show for today. And I am Troy Johnson, and we call this show Bet Out of Debt because when you place a trade, it's called placing a bet. And hopefully it's a winning one to keep you out of debt. And as always, keep investing. And we will see you next week.